shift. And so the results aren't totally unexpected. Now, there was some good news in terms of guidance. So NIO upped its guidance in terms of Q2 revenues. It should double effectively from where it was a year ago. And they also expect higher delivery numbers than they had previously guided in the second quarter. So there's some good news. They just got approval for a new factory in China. It'll be their third factory. It gets their capacity up to almost 1 million vehicles a year, which rivals Tesla in China with their Shanghai factory. So there's some good news, but it's clearly just a challenging environment for EV manufacturers right now.
Optimistic, analytical, and engaging. Exciting times for NIO stock investors. Last June 6th, NIO revealed its first quarter 2024 earnings, and the reaction was swift. NIO's shares nosedived over 8%. Despite this, some see a silver lining. For those who believe in NIO's potential, this drop could mean the stock is now on sale. According to Citigroup analyst Jeff Chung, this is the moment to see opportunity, not despair. NIO's report wasn't stellar. It delivered just over 30,000 cars, a 3% dip from last year, revenues falling 7%, and a hefty $718 million net loss. These aren't the kind of numbers you cheer for in an earnings call. But does this downturn spell doom, or is it a golden chance to grab NIO stock at a bargain? As of June 11th, 2024, here's the analyst's rating of NIO on Moomoo. $6.27 is what NIO's stock price will eventually reach. In this case, it suggests an increase from the current price. On the other hand, positive 31.45% is the percentage that likely represents the potential gain between the current price and the analyst's target price. It essentially shows how much the stock price could rise based on the analyst's prediction. It's valuable to explore Moomoo's overall analyst sentiment for NIO. While it shows a single buy rating, Moomoo might offer a consensus view based on multiple analysts' ratings. This broader perspective can help you understand the general analyst sentiment towards NIO. Analyst ratings are just one piece of the puzzle. Before making any investment decisions, it's crucial to conduct your own research. Consider factors like the company's financial performance, industry trends, and overall market conditions. Past performance is not necessarily indicative of future results. One thing is for sure, if you subscribe to our free newsletter today, you will receive a $1.50 bonus via Wise. Additionally, you can unlock the opportunity to earn up to $10 by referring friends. This offer is only available for a limited time. Find out more and sign up using the QR code or the link below. Even though the analyst predicts a rise in price, it's not guaranteed that it will happen. By considering this information along with your own research, you can make a more informed decision about whether or not to invest in NIO stock. What do you think about NIO's latest results? We'd love to hear from you. And if you enjoyed this update, hit that like button and subscribe for more.
Can something turn this around? I mean, they gave some good guidance to Philip's point. You know, what's going to turn this around?
Hi, Nicole. Thanks for having me on. Yeah, Philip's right. It's basically, you know, the EV market's been a little soft in the past quarter. I think it's coming back. Obviously, the guidance looks really good. But two things that are interesting to me about NIO is one, their margins were up almost 2x from last year, year over year. So in this kind of environment, to be able to come out with an improvement in gross margins is pretty impressive, especially against Tesla, since we've brought Tesla into the conversation. And Tesla slashed its prices last year to be able to keep its market share. And NIO was a little bit more aggressive with its financial discipline.
Moving forward, vehicle sales are NIO's lifeblood, bringing in $1.37 billion for the first quarter of 2024, a 7.2% drop from last year, missing the $1.44 billion analysts had hoped for. The company's earnings per share loss of 36 cents fell short of the expected 33 cents, and the net loss was a little above $718 million, up 9.4% year over year. But CEO William Li remains optimistic. Despite the fierce market competition, NIO's premium branding, leading-edge tech, and innovative chargeable, swappable, upgradable power solutions are proving their worth, driving solid growth in vehicle deliveries recently. Li acknowledges the brutal electric vehicle battle in China, with price wars slashing profit margins. Adding to the challenge, China's property crisis has dampened consumer enthusiasm, hitting NIO's luxury segment hard. On the other hand, NIO's shares have ticked up slightly. On June 6, 2024, NIO reported its fiscal first quarter revenue of 9.91 billion yuan, which is around $1.37 billion. This is a 7.2% year-over-year drop and a dramatic 42.1% plunge from the previous quarter. This fell short of analysts' expectations of $1.48 billion for the quarter. NIO reported an adjusted loss per share of 2.39 yuan, or 33 cents, excluding share-based compensation. This is slightly better than the 2.51 yuan loss from a year ago and 2.81 yuan from the fourth quarter of 2023. Analysts had predicted a loss of 31 cents per share. In a promising turn, NIO and Guangzhou Automobile Group's energy divisions have entered a partnership to share their charging networks, marking a significant milestone since their agreement last month. On June 7th, NIO Power and Guangzhou Automobile Group Energy sealed a deal to share their charging networks. The aim is to create dynamic data exchange between platforms and allow users to use each other's charging facilities. This achievement follows NIO and Guangzhou Automobile Group Energy strategic partnership signed last May 8, 2024. From June 7th to June 30th, both NIO and Guangzhou Automobile Group Energy users can enjoy up to 30% discounts at each other's charging stations. Their cooperation, formalized in Guangzhou last May 8th, covers battery standards, vehicle research and development, battery asset management, and the development and operation of a power swap network. Now, as we analyze NIO's stock, let's examine its volatility analysis and volatility term structure. The volatility section shows NIO's implied volatility and historical volatility for 4 different dates. Implied volatility is a measure of the market's expectation of how much an options price will fluctuate over time. In this image, NIO's implied volatility as of June 22, 2024 is at 72.8%. On the other hand, historical volatility measures how much a stock's price has fluctuated over a specific period in the past, and NIO's historical volatility as of June 22, 2024 is at 71.62%. The implied volatility rank and implied volatility PCTL columns show how NIO's current implied volatility compares to its historical implied volatility. A higher rank or percentile indicates that the current implied volatility is higher than usual. In our presented data, NIO's implied volatility rank is 16, and its implied volatility PCTL is 22%, which means the current 4 is higher than 22% of the time in the past. These 2 sections show how NIO's implied volatility is expected to change over time for different expiration dates. Generally, an upward-sloping volatility term structure suggests that the market expects volatility to increase in the future, while a downward-sloping term structure suggests the opposite. In the image, the volatility term structure for NIO is downward-sloping. This means that the market expects NIO's volatility to decrease between June 14, 2024 and January 16, 2026. It's important to note that volatility is just one factor to consider when investing in a stock. Other factors, such as the company's financial performance and overall market conditions, can also affect the stock price. NIO's first quarter of 2024 earnings revealed a significant dip, with revenues falling to a little above $1 billion, down 7.2% year-over-year and 42.1% from the previous quarter. The company missed analyst expectations of $1.44 billion. The company reported a net loss of $718.1 million, up 9.4% year-over-year, and an adjusted loss per share of 33 cents, slightly worse than the forecasted 31 cents. Despite these setbacks, NIO's shares have seen a slight uptick. CEO William Li remains optimistic, highlighting NIO's premium branding and innovative power solutions amid fierce competition and a tough market environment in China. In a positive development, NIO and Guangzhou Automobile have launched a partnership to share their charging networks, marking a significant step forward in their collaboration. The partnership offers users mutual benefits, including discounts at each other's charging stations. So, does NIO's recent dip spell doom or present a golden buying opportunity? It could be seen as a chance to invest at a lower price if you believe in NIO's long-term potential. However, always conduct thorough research before making any investment decisions. The question here is, could NIO's recent challenges be the perfect setup for a strong comeback? Share your insights in the comments below. If you enjoyed this video, you may also like our hand-picked, action-packed newsletter about NIO. Subscribe now at wiseinvesting.com. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about NIO stock, just click this video here. Thank you for tuning in, and stay tuned for more exciting content in the future.